Guaranteed income plan, is it really worth it taking right now? And is it worth getting around 6%, 5.5 to 5.85 to 6%? In the last couple of years, this is the returns guaranteed income plan is offering. Is it really worth it? Or getting a regular income for the next 30, 40 years, 1 lakh per year for the next 30 years, whole life for same amount of money for the whole life, and then getting the maturity amount also, double the investment, and the investment time period is going to be 40 years. All these are the things you may have questions, and I'm going to answer all these things one by one in this video. Please watch it. Yes, guaranteed income plan. What is it? First, you need to understand what is life insurance, and then we will come to the guaranteed income plan. Life insurance is nothing but the risk protection measure. For example, I have a family and I have a kid, and if I'm no more, they are the dependents on me. My family, they are dependent on me. If I'm no more, who will take care of my wife and my kid in my absence? And financially, emotional support is totally different. I always repeat that point. But financially, who will take care of themselves? Even though I have my brother, my family, and my mother and everyone, but still, financially, who will take care for a longer period of time till their death or whatever? So that is where life insurance plays a crucial part. If I have a term insurance, the entire sum will go to my wife and my kid so that they can take care for the next couple of years, and by the time they can work out what can be done from a job point of view, and then financially if they are strong, that is what everyone will aspire for. So this is what purely life insurance is all about. If I'm there for the next 20 years, I will take care of my kids' education, my wife, and our entire family's wealth will be taken care. If I'm no more, my risk protection measure, the risk term insurance will take care of the entire money needs. This is how you should consider life insurance. But most of the time, in case of term insurance, there won't be any bigger returns because it's a pure measurement tool, and the premium whatever you pay for pure term insurance, you're not going to get it back, and that is what every insurance companies does. But that is what the biggest downplay. What can we say? That is what the biggest negative point for many of the people like you, because you think the money what you pay is wasted. How you should take and how you should consider term insurance, we can look it into the different video. I can share the link which I had done long back. But for that, for those kind of people, this guaranteed income plan came in place. So you are paying certain amount of money and you'll be given certain amount of money, but the amount what you pay for a guaranteed income plan is much higher. Say 10,000 rupees you are paying for guaranteed income, the term insurance will be costing less than 500 rupees, whereas guaranteed income you will be paying 10,000 rupees, and the coverage will be 10 times lesser compared to the term insurance. I'm repeating, the premium for guaranteed income plan will be 10 times higher, and the coverage will be 10 times lower. So this is how the disparity will be. So how can you protect yourself in this kind of situation? So now you are clear, right? What is life insurance? What is guaranteed income plan? And based on that, this was started in LIC was started in India 1956, and at that time, government wanted everyone to be protected, and a small savings, say 4% or 8%. That is the IRD regulation. They'll give you a plan between 4% and 8%, and right now, based on government securities and the prevailing RBI interest rate, you will be getting the interest. And right now, it is around 5.85 or close to 6%. So it can go up or down, but the overall in the last 10 years, the interest rate had come down from 10% or 9% to less than 6%. So this is the current market condition. So how mis-selling is happening in these kind of situations? When you go and approach when you have, say you have a bank account, you go to a relationship manager, or that relationship manager will call you because you have a surplus amount in your bank account, and they'll be offering a products without understanding whether it will help you or not. They just want to sell it away, because I have seen n number of stories where relationship manager just pushes the product without understanding it, or without understanding the need of the customer. So mis-selling happens because you will be promised the guaranteed income of 6%, and on top of it tax saving of tax bracket, because it's tax exemption. You may be falling under 10%, 20% or 30%. They will add that amount and say that you are going maximum, you will be getting a tax-free income of close to 9 to 9.5% in 10, 20 years timeline. This is one of the easiest way to convince you so that you will also invest. And they may not promote a term insurance. This is a life insurance, and you're going to get a guaranteed income. In term insurance, there is no income at all. It's a pure risk protection. You are going to pay. It's like just like an AMC, annual maintenance charge for my life. So I am paying term insurance for first year premium for first year, and my life is protected, and if anything happens within a year, my family is going to get the income, get the money. That is how term insurance works. So the mis-selling happens because you are promised a guaranteed income. You need a guarantee, because just think of, if there is a volatility, we will say, I don't want it. I don't want to take risk. Life insurance with guaranteed income, there is no volatility. There is a promise. You will be getting it at the end of the term. That is how it works, and it's easy for everyone to understand and invest. The illustration will show that, and it can be between 4 to 8%, as I said. So, how to protect yourself from mis-selling? Just think of getting a, and right now the products are evolved. 10 years before, you will be asked to pay a premium for 10 years, and at the end of 20th year, you will be getting the double the money. Or you will be asked to pay the premium for 20 years. At the end of, say, for example, 50,000 per month, 50,000 per year, and by 20th year, the policy will be for 10 lakhs. By the term end of 20th year, you would have paid off 10 lakhs, and you'll be getting close to 20-24 lakhs. Based on the interest rate, you'll be getting less, close to 20 lakhs or around 20 lakhs, right? So this is how the policies were sold off. But in the last 5-6 years, products had evolved, people had evolved. People can't wait for 20 years. So what has happened is, you pay the premium, and right from the next year or right from the 10th year, you will be getting a regular income out of it. Say you pay premium 1 lakh for 10 years, and from 11th year you will be getting 1 lakh. And because just think of, if you pay 1 lakh for 10 years, 10 lakh amount, by the end of 11th year or by the end of 20th year, you should have been getting 20 lakhs. So these companies, instead of paying you this entire maturity amount at the 11th year or 12th year, they keep on with a cool off period of 1 year. They keep on paying 1 lakh for next 20 years. It means you will be covered for 30 years with the same premium, whatever you paid. You will be paid the same amount for the next 20 years, and the maturity amount will also be given. So this is something which is available in the market, provided by all the bigger companies: ICICI, Tata AIG, HDFC, LIC. LIC had started with, I think, and most of these companies are giving in the different names, and it can be lifelong income or whole life income. But the point is, are you happy with this kind of investment, and are you happy with this kind of returns? Getting 1 lakh right now may be a good choice, but getting 1 lakh in 4 years may be a good choice. But after 10 years, after 20 years, cost of depreciation will bring down the 1 lakh to less than 25,000 in 20 years timeline. And in 40 years, even the maturity amount will be much lesser. I'll show you the example in the next couple of minutes. So, how to protect yourself from mis-selling these kind of things? You should calculate your financial corpus. Say, for example, for kids' education, at the end of 18th year, what should be the amount he or she needs? Say you need 50 lakhs from now on, in the next 18 years, you should start investing so that you are getting close to 50 lakhs at that time, or even higher. But in case of insurance, you can take 10 lakh, 20 lakh, 50 lakh policy. The premium what you pay will be much higher compared to investing in mutual fund. So if somebody is saying take a child insurance policy, say that what should be the amount I need, ask them to calculate and provide, and is it really worth it? And another point is, based on rule of 72. Divide 72 by the returns percentage. If they offer 6%, my money is getting doubled in 12 years. 72 divided by 6%, 12 years. Is it really a worthy investment? And if it is less than 6%, India's inflation is around 6%. And if you're getting the same kind of returns, it's not even beating the inflation. So say these points to the people who are pushing you with these kind of policies, and you can avoid the selling. Okay, and we had already seen why guaranteed income plan, because they will say that volatility will not be there, fixed income even in the future, even if interest rate goes down, you are going to get close to 6%. But the point is that is not guaranteed at all, because if the interest rate goes down drastically, they may reduce the entire corpus, because vested bonuses will be provided based on the that year financial thing. So certain portion is fixed, certain portion vested bonus addition will come at the later part. So that cannot be promised. It can be tentative calculation, and you may get close to it. That is how the guaranteed income plan works. And if somebody is offering you regular income, passive income, all these kind of fancy terminologies, think of, if you get a maturity at the end of 40th year, is it really worth it? And if you get regular income of say 1 lakh or 2 lakh or 5 lakh in the 30th or 35th year, will it be really enough? Because after 35 years, the amount of money you require for an entire year will be totally different. and if you're getting 5 lakhs, the premium what you pay right now will be much higher. So think twice before considering taking this policy. Is it worth taking? I explained a lot because consider inflation, consider the returns percentage, and consider after 10, 20 years, is it going to help in any form for your retirement, for your kids' education or marriage or any purpose? And then you should decide because by this time you will be clear, is it going to be a right product or not? And finally, let me show you an illustration by one of the insurance companies. By the age of 40, if you're taking a 40-year term policy, 40-year return on premium policy. I mean, guaranteed lump sum benefit. You need to pay 1 lakh per month, 1 lakh per year for the next 10 years. And by the end of from the first year itself, I mean, from the next year itself, you'll be getting 37,350 for next 40 years. By this way, you're going to get close to 14.94 lakhs, and maturity amount will be given around 14 lakhs at the end of 40 years. And how it is calculated? 70% of the guaranteed lump sum is maturity amount. So 7 lakhs plus another bonus of 7 lakhs, 14 lakhs. So in total, you are going to get close to 28.94 lakhs in 40 years timeline. So is it really a worthy investment? Because getting 14 lakhs at the end of 40th year, it is going to be worth less than 2 lakhs considering the market condition and inflation. And getting 1 lakh at the end of 30th or 35th or even 10th year, the value is going to be much lesser as I explained. So guaranteed income plan, think of whether you really need it. Guaranteed income. There are so many products like NCDs and other things where for the next 3 to 5 years you'll be getting a guaranteed income. Government bonds are there where you're going to get close to 9%. All these are more than enough for the next 5 years to take care of your guaranteed income because things keeps changing. If it is more than 5 years, you should invest so that you're getting double-digit returns in equities or stock market or any other form of investment. So think wisely and then decide which is the right investment choice. Follow me to get right investment choice for your money and investment. Thank you once again. This is Ganesan, your financial expert.